Today, the DOJ claims Sam Bankman-Fried paid millions in bribes to at least one Chinese official. Binance and its CEO Changpeng Zhao respond to the CFTC's lawsuit. And Rettig of Polygon Labs discusses what the lawsuit means for Binance and crypto exchanges in the US. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices are mixed this morning, a day after a new lawsuit from the CFTC against Binance. As of noon Eastern, Bitcoin traded right around $27,000, Ether traded at $1,700, and Polygon was worth $1.06. Okay, let's talk about the top stories. First, the DOJ brought a new indictment against Sam Bankman-Fried. Federal prosecutors allege the co-founder of FTX paid more than $40 million in bribes to at least one Chinese government official after accounts tied to Alameda Research, which held around $1 billion in crypto, were frozen by Chinese police around November 2021. The DOJ claims that Bankman-Fried and others directed or caused the transfer of those millions in cryptocurrency in the hopes of convincing government officials to unfreeze the accounts after multiple legal and personal efforts failed. The charges point to new evidence gathered by the federal government about SBF's international dealings. CNBC reached out to Sam Bankman-Fried's spokesperson, but they haven't responded. Next, Binance and CEO Changpeng Zhao are firing back against the CFTC's lawsuit. Yesterday, the CFTC alleged that Binance and CZ violated compliance rules and courted high-profile U.S. customers for millions of dollars in revenue, and CNBC previously reported how Binance used similar methods to court users in China. Well, in the open letter, CZ called the CFTC's civil complaint disappointing and said that it contains an incomplete recitation of facts, and we do not agree with the characterization of many of the issues alleged in the complaint. He went on to say that Binance has best-in-class KYC technology and is committed to transparency and cooperation with law enforcement. CZ then said Binance.com does not trade for profit or manipulate the market under any circumstances. Finally, Disney just announced thousands of layoffs, and that includes its entire metaverse division. CNBC confirmed the media giant just axed that unit, which was established by former CEO Bob Chapek, and hoped to create a new digital world for Disney. The entire team of around 50 people lost their jobs, while the head of the division, Mike White, will remain at the company. His role, though, is unclear. Disney never did explicitly say what it planned to do with the metaverse, but in 2021, Chapek said the company was creating unparalleled opportunities for consumers. So why do we care? Well, the metaverse and crypto are still synonymous with the Web3 hype that took over the news cycle this time last year. Now, though, that hype has faded as crypto and tech get hit with these deep job cuts. All right, let's turn back to Binance for our main story. With the legal battle for the world's largest crypto exchange heating up here in the US, what does it mean for the crypto company and for crypto exchanges at large? Well, Crypto World's Mackenzie Sigalos spoke to Rettig, Chief Policy Officer at Polygon Labs, to find out.
So Binance being sued by the CFTC, let's just start by setting the stakes.
Sure. So the CFTC filed a complaint in the Northern District of Illinois yesterday, which is Chicago. I think that's probably notable given the CBOE and other major options exchanges that are located in Chicago and have a lot of historic roots there. Alleging really wide-ranging violations of the Commodities Exchange Act. So operating illegally an unregistered foreign board of trade, illegally operating all sorts of different types of derivatives exchanges, and essentially alleging that they were doing it in the US, even without having a physical presence here. This is setting aside Binance US, but really talking about Binance.com, and also incorporating a lot of, I think, gloss on allegations of violations of the Bank Secrecy Act. So any types of financial institutions in the United States have to comply with the Bank Secrecy Act, which means you have to really be abiding by OFAC and other types of sanctions compliance. And I think a lot of the internal emails that are and chats that are highlighted in the CFTC's complaints are extremely salacious on the sanctions violation front. But more than anything, I think it's also important to note that they are looking to bring CZ directly into this complaint. They name him, they call him what's called a control person. So the person who is really orchestrating what's going on in terms of the illegal conduct, and bringing him personally into the CFTC's purview in this as well. And then they seek very wide-ranging remedies, including cutting off all sorts of conduct that Binance.com has been historically engaged in.
Right. And on that last point, we had the CFTC chairman on our air this morning, and Russ Benham said that there was indeed a hypothetical where Binance was outright banned. And so let's walk through that scenario, because when you think about the knock-on effects from that, they account for what, 70 to 80% of the market share of all centralized crypto exchanges right now?
I think that's right. I think Binance is trying to combat that there even could possibly be a ban with a lot of its recent public statements. Obviously, CZ put out a statement yesterday, but they also made public their letter to Elizabeth Warren and some other senators in relationship to an inquiry there, and highlighting a lot of their new compliance personnel and various types of new conduct that they're engaged in, hopefully probably in an attempt to combat some of this outright ban. As far as the market liquidity, I think there are a lot of good actors out there now who are ready and prepared to take on some of this liquidity, who have licenses and either are regulated in some way, shape, or form, and are looking and seeking additional regulation as well and additional regulatory clarity.
And earlier you were talking about this idea of, jurisdictional arbitrage in a sense. And so the CFTC chairman was just speaking to the fact that even if we're talking about Binance.com, so the global entity and not Binance.us, even if you say that you're headquartered abroad, that doesn't preclude you from being subject to US laws. So this action is targeting Binance.com, not Binance.us, but there's a lot of conversation out there as to whether there's more commingling than the company lets on. Walk us through how that works, these many jurisdictions of Binance, and where the CFTC fits into regulating the company as a whole.
Sure. So no U.S. regulator has a jurisdiction over a foreign entity unless they are, quote unquote, availing themselves of the privilege of doing business in the U.S. or taking on U.S. persons. I think the complaint really tries to outline how Binance clearly tried to evade being brought into the jurisdiction of the U.S., but still soliciting it behind closed doors and through back doors, U.S. persons, and bringing very large whales onto their platform. And so there is, even if they were operating outside the United States, if they were actively soliciting U.S. persons to come trade on their exchange, they will be brought into U.S. jurisdiction and certainly be within the CEA's and the CFTC's jurisdiction.
How imminent do you think some sort of DOJ action might be in this case?
I think bringing in a lot of the allegations or attempting to having CZ be a control person of essentially a U.S.-based exchange or an exchange that was brought into U.S. jurisdiction is trying to set up for the DOJ to have jurisdiction over CZ for some of these allegations directly, as they did over a number of the operators of the BitMEX exchange. To your point earlier about the commingling, the interesting piece is about bringing in the jurisdiction here. It's not that, oh, you necessarily operated a U.S. exchange, and they didn't even have to get into the question of were there separate bank accounts? Are these really separate entities? Do we have to figure that out? The real question here is only, were you actively trying to evade U.S. laws? And what does that mean? The other piece of it that comes into it is, if you were trying to evade U.S. laws and you were bringing any of even your outside lawyers into it, what does that talk about in terms of making some of your more private communications that you assumed were privileged, discoverable by the CFTC? So while the allegations in here feel very explosive and certainly, as I said, very salacious, I'm not sure we've even scratched the surface of what we may be able to, what the CFTC may be able to discover down the road.
And what does it say more broadly about the way that, regulators like the CFTC and SEC, as well as the DOJ, are kind of coming after the crypto sector? I mean, it's just the latest in a series of actions that have been taken, but how are you reading the tea leaves here in terms of what we can expect in the next dominoes to fall and all that?
I think the message is pretty clear, which is you can't come into the United States and conduct business here and target U.S. persons, especially U.S. retail, without falling under our regulatory purview and being licensed by all the various different regulators. Let's set aside that Binance.com doesn't even have money transmission licenses in the United States, as far as I'm aware. They only have supposedly certain licenses, as they said publicly, outside the U.S. And so if you're going to come here, then you have to be subject to our laws. And I think that's just a very clear message, and certainly one that is going to be increasingly more clear post FTX, given what we saw happen there.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, so we'll see you then.